Investing. The very word can seem intimidating, conjuring up images of Wall Street tycoons and complex financial instruments. For many, it feels like a world reserved for the elite, a complex maze of numbers and jargon that only a select few can navigate. But the truth is, investing is simply about putting your money to work for you, allowing it to grow over time. It's not about having a large sum to start with. Even small, consistent investments can yield significant returns. It's a journey towards financial freedom, a way to build wealth and secure your future. Imagine being able to provide for your loved ones, to afford the lifestyle you desire, and to have peace of mind knowing that your financial future is secure. Many people shy away from investing, fearing the risks and complexities involved. They worry about losing their hard-earned money, about making the wrong choices, and about the volatility of the market. They assume it's a game best left to the experts. But the reality is, with the right knowledge and tools, anyone can become a successful investor. However, long-term investing is remarkably straightforward. It's not about making quick decisions or chasing the latest trends. It's about setting clear goals, creating a plan, and sticking to it. It's about patience, discipline, and trust in the enduring power of the market. Just like planting a tree, it takes time for your investments to grow, but with care and attention, they will flourish. This approach is not about chasing quick profits or timing the market. It's about understanding that the market will have its ups and downs, but over the long term, it has historically trended upwards. It's about planting seeds of financial security that will blossom over decades. Each investment you make is like a seed that, with time and the right conditions, will grow into a strong, healthy tree. With a long-term perspective, the ups and downs of the market become less daunting, more like gentle waves on a journey towards a distant shore. You learn to ride the waves, understanding that each one brings you closer to your goal. So, let us embark on this journey together, dispelling the myths and anxieties surrounding investing. Let's break down the barriers and make investing accessible to everyone, regardless of their background or financial knowledge. Let us uncover the power of long-term investing and its potential to transform your financial future. Together, we can build a foundation of financial security and prosperity that will last for generations to come. Imagine the year 1942. The world was a very different place back then, a time when the future seemed uncertain and the present was fraught with challenges. The world was engulfed in war, uncertainty clouded the future, and the global economy was in turmoil. Nations were focused on survival, and the war effort consumed resources and attention. The stock market had plummeted from its pre-war highs, reflecting the widespread fear and uncertainty. Investors were gripped by anxiety, unsure of what the future held. It would have been easy to succumb to fear, to believe that the market would never recover. The news was filled with grim reports and the outlook seemed bleak, yet those who dared to invest during those tumultuous times were handsomely rewarded. They saw opportunities where others saw only risk, and their courage paid off. Despite the war, despite the economic uncertainty, the American spirit of innovation and resilience endured. Factories ramped up production, new technologies were developed, and the seeds of future growth were sown. Companies adapted, industries transformed, and the economy, against all odds, surged forward. The post-war period saw a remarkable recovery, driven by the ingenuity and determination of the American people. The lesson here is clear: even in the face of adversity, the power of long-term investing prevails. Those who had the foresight to stay invested reaped the benefits of the market's eventual recovery. Those who stayed invested, who resisted the urge to panic and sell, participated in the remarkable growth that followed. Their patience and perseverance were rewarded as the market rebounded and continued to grow. This historical example underscores the importance of taking a long-term perspective. It shows us that while short-term volatility can be daunting, the long-term trend has been one of growth and prosperity. It reminds us that the market is cyclical, that periods of decline are often followed by periods of robust growth. The key is to remain patient and stay the course, even when the outlook seems uncertain. By staying the course, by weathering the inevitable storms, we position ourselves to reap the rewards of long-term market appreciation. History has shown us that those who remain steadfast in their investment strategy are often the ones who achieve the greatest success. The post-war economic boom was a testament to the resilience and adaptability of the American economy. Businesses thrived, new industries emerged, and technological advancements paved the way for future growth. Investors who had the courage to stay invested during the war years found themselves in a position to benefit from the economic prosperity that followed. Their faith in the long-term potential of the market was rewarded many times over. This historical perspective serves as a powerful reminder of the importance of long-term thinking in investing. It encourages us to look beyond the immediate challenges and focus on the potential for future growth. By understanding the lessons of the past, we can make more informed decisions about our investments today. We can approach the market with confidence, knowing that while there will be ups and downs, the long-term trend has been one of growth and opportunity. So, as we navigate the complexities of the modern market, let us remember the lessons of 1942. Let us stay committed to our long-term investment strategies, confident in the knowledge that history is on our side. Patience. It's not just a virtue, it's a powerful tool for wealth creation. When you plant a seed, you don't expect a tree to sprout overnight. You water it, nurture it, and give it time to grow. Similarly, in the world of investing, patience is the cornerstone of building substantial wealth. In the realm of investing, time is your greatest ally. The market may have its ups and downs, but over the long haul, it has historically trended upwards. This means that the longer you stay invested, the more you can potentially benefit from the market's overall growth. The longer you stay invested, the more you benefit from the magic of compounding. Compounding is the process where your investment returns generate their own returns, creating a snowball effect that can significantly boost your wealth over time. Imagine a snowball rolling down a hill. At first, it starts small, barely noticeable, but as it continues to roll, it picks up more snow, growing larger and larger. Initially it's small, its growth almost imperceptible. This is akin to the early stages of investing, where your returns might seem modest. But as it gathers momentum, as it accumulates more snow, its size increases exponentially. This is the power of compounding at work, where your returns start generating their own returns, leading to exponential growth. This is the power of compounding at work. Over time, your initial investment grows and the returns on that investment also grow, creating a cycle of increasing wealth. Your returns generate further returns, creating a snowball effect that builds wealth over time. This is why staying invested for the long term is so crucial. This principle holds true in the stock market. Historical data shows that despite short-term volatility, the market tends to rise over the long term. By staying invested, you can ride out the short-term fluctuations and benefit from the market's overall growth. The longer you allow your investments to grow, the more they compound, leading to potentially significant returns. Just like a tree that grows taller and stronger with each passing year, your investments can flourish if given enough time. This is why it's crucial to start investing early, even with small amounts. The earlier you start, the more time your money has to grow and compound. Small, consistent investments can lead to substantial wealth over the long term. Time, not timing, is the key to success in investing. Trying to predict market movements can be a futile exercise. Instead, focus on staying invested and giving your investments the time they need to grow. Resist the temptation to chase short-term gains or to time the market. Short-term market movements are unpredictable and can lead to emotional decision-making, which often results in losses. Instead, embrace the power of patience and allow your investments to compound over time. By staying the course and focusing on the long term, you can reap the rewards of time in the market. To truly appreciate the power of long-term investing, let's turn our attention to the historical performance of the S&P 500. A benchmark index of 500 large American companies. As you can see from the timeline, the journey of the S&P 500 has been anything but smooth. It's a tapestry woven with periods of remarkable growth and inevitable downturns. Yet, despite wars, recessions, and financial crises, the overall trend has been undeniably upward. Since 1942, the S&P 500 has delivered an average annual return of around 10%. This means that a hypothetical $10,000 investment in 1942 would be worth millions today, a testament to the power of compounding and the resilience of American business.